Hey traders, this is Jeff from ZenTrader.ca with a weekend update. I'm going to start off with the NASDAQ. We're going to look at the Toronto Stock Exchange, transport, dollar, and a couple sectors, which I think will continue to paint a bearish outlook on the general markets as we look at the home improvement retailers and the real estate index. But let's go back to the NASDAQ. Because that's really my market timing signal starts here. We basically, from the time we got the first sell signal, we sold off. We've rallied back on light volume. We basically have made everybody a believer in the bull, even though we continue to have lower highs. It just astonishes me how quickly, when everyone was bearish back here, and saying how they wanted to short the markets when it rallied. When now that the rally's materialized, Apple looks horrible and looks like it's ready to fall a lot further, and yet not that many people are shorting the markets. So this V bottom that we have right off here, this rarely is sustainable. It just, in my experience, generally there's some sort of a retest, and then we really discover how weak or strong the general market is. So I think at the very least, we could possibly come down and fill this gap, and then at that point we really need to see. Right now I'm not seeing any individual. No, I shouldn't say any individual stocks. There are a few, but not the leadership in breakouts that I think really the market needs to really pull back up to these previous highs. TSX, it's weak. It's got a rising bearish wedge here, and it's really kind of just come back into this consolidating range. It's kind of peeked its head up into it, but it doesn't really seem. This doesn't seem sustainable either. I really feel that this is going to kind of roll back over the coming weeks, and test this support level. The transports they're in this giant wedge, and every time it gets back up into the top range, it seems to find some resistance, and it starts to rally. It starts to sell off back down here to support. So yeah, we have a little bit more room. We've got about maybe 80 points before we touch that. So maybe the market's head up in anticipation of the Fed and then sell off. It's really tough to say. A lot of this analysis that I'm talking about right now, it's going to be, it could be completely useless with the Fed coming out, because it's so volatile, and the moves are so unpredictable as to how traders are going to react to the news. Let's look at the dollar. It's still forming a pretty giant head and shoulder pattern, and even though I'm not a huge fan of these patterns, it's still, let me just explain why. Because they're so widely followed now, so it seems like they rarely ever play out, but so far this does seem to be playing out. But really, it's just a matter of, is it going to form the right shoulder completely, come down, and then what's it going to do at that point? I don't really like this trade. I just had this chart in my watch list, and I wanted to share with you guys quickly. I've got two sectors here. The home improvement retailer, this has some pretty significant negative divergence, not only on the daily chart, which you'll see here, it's on the weekly chart as well. It's even more pronounced there. I expect this to pull back. My first target here is 135, and my second target is all the way down here around 118, 119. I think that's a very realistic possibility given how strong this has rallied. This is pretty phenomenal if you really look at this, and you look at the real estate index, and it's weak. It's got a rising bearish wedge here. The RSI is in a very precarious state. It generally will, after it reaches oversold levels, it'll rally back up to the 60 level and then roll back over. Given that we have a rising bearish wedge running into what I consider significant support, this chart looks like it's about to roll over, and I just can't see the general markets rallying without the real estate index behind it, coupled with the home improvement retailer sector being extremely overbought. I think the market is still in a dangerous position.